today's video, I am going to show you how to trade the channel breakout strategy in Forex trading. This is not just restricted to Forex. Even though I am solely into Forex, you can apply the same principle to cryptocurrencies and also in stocks. However, today's one is about Forex, and I'm going to show you how you will go about that. So the first thing that I will be showing you in the video is how to draw a channel properly, the correct way of drawing a channel. Because if you don't know how to draw the channel properly, you cannot trade the channel breakout. So when you are on your chart, you are going to go over the second row on trading view. That's where the trend line tools are located. You click on it and you come down to parallel channel 2. So you click on it. Once you click on it, you go to your chart. Make sure you shrink your chart the way you have seen me doing it like this. You can also use the zoom tool of your browser, something like this particular one here. You can shrink and increase it. However, if you leave it at the usual setting of 100% for it to fit well for you to see the candles, you may not detect a channel properly. So you need to shrink your chart so that you will have a wider view. Once you have a wider view, it's very easy spotting them. It is very easy to spot a channel if your chart is shrunken. So I am going to shrink it to about 50%. This is it, about 50%. And you can see the time frame that I am using over here is 30 minutes. It depends on what type of trade you want to be holding. The higher the time frames, the more you have to wait for a longer time for you to take your entry, and you have to hold it for a longer time to hit your take profit. That is the disadvantage of using higher time frames. Whereas on lower time frames, you can spot them easily. They occur frequently, but they may not be as potent as the higher time frames. So I prefer I go with 30 minutes. So from here, I have shrunk the chart and I have also chosen my time frame to be 30 minutes. I can see the candlesticks are clear currently. So what you need to do, after picking your tool, go over to your chart and pick 3 points. We are going to check for 3 points that can perfectly fit our tool. So this is 1. Once you click, you drag to another point. This is 2. This is the second point. Make sure that they are fitting each other. They fit perfectly, or at least something roughly perfect. Okay, and then look at this particular one now. This is the third point now. This is the third point we are fitting. Once you get your third point, you will now click again, then you drag it to the opposite side, because a channel, it contains just 2 lines that are parallel to each other. They could be inclined the way you are seeing it, or they could be horizontal. Okay, so I am showing you the parallel channels here that are inclined. So you drag it to the opposite side until you can fit 2 points. You can fit 2 points, or at least 2 points. Okay, you can fit 2 points. So we have 1 point here and we have another one here. So we have our channel. It has been fitted. Now, if you have 3 of these, 1, 2, 3, and you cannot find another one, you see this one is roughly close to the line, and this one is touching it as well, and this one is touching it as well. So if you cannot find the opposite points that will touch this your line at least 2 times, once you have 2 points that are touching the opposite line, you have drawn your channel in a correct way. But if you cannot find it's just 1 point, you can't use that one as a channel, because you need something that price is hitting between these 2 parallel lines. So we need something that price pushes, it touches it, it retraces inside again. Anytime that price touches it, it has to bounce back. It touches again, it bounces back, it goes to this side. So it's like price is just dancing in between, inside of these lines. That is what we are looking for. Don't go looking for something that you only have, let's say, one. It comes up here, it touches it. It has touched this one like 3 times, but you don't have another one touching this other particular point. If you don't have it like that, that is not a correct way. So we don't want only one point being tapped. You can't use it. So if you have 3 points here that you have done 1, 2, 3, then you need the opposite side to have at least 2 of the points touching the opposite line to make it a correct channel. So with this one currently, we have a correct channel. Why? Because we have 3 points on one part, 1, 2, 3, tapping it. And on the opposite side, we have 1, 2, even 3 that are tapping this. Now we have a parallel channel. The strategy that we are using is the breakout strategy of a channel. Once you draw it, you are waiting for when the price will break the channel. So we are waiting for a break out of this channel. Now it can also break downwards. Sometimes it can break downward like this, go back to retest, and then continue going downwards. Or we could have a break to the upside. It could break up like this, it will retest, and then it will continue going upwards. Anyhow, price has to what? Break the channel. So how are you going to trade the breakout? From here, we can see that price broke out at this current level. It broke out at this current level. So since we have drawn the channel properly, I am going to increase the chart for you to see the breakout. Okay, so you are now going to enlarge. I'm going to enlarge to see where the breakout occur. And we want this breakout to happen with a full candle body. We are not looking for the wicks where you see it will break out like this particular wick. It broke out and it melted inside again. Another second one broke out. It gave a doji, which is a wick as well. This is the candle that gave that confirmation. This is the candle that gave the confirmation that we have a breakout. And there are 2 ways of taking your entries. The first one, immediately price is breaking out, you are going to take your entry at the close of that candle. So this is the green candle that gave the breakout. Your stop loss is going to be below this particular low that was created before the breakout occurred. And your take profit is going to be at the top. So whatever high that gave rise to that channel where you started drawing it, you are going to target that high. You are going to target the high. You can see it. That is it. Now, this is one way of taking your entries. The second way of taking your entry is you are going to wait for a retest of the neckline or a retest of the channel. What is a retest of the channel? Here you can see that there is a break over here. The break occurred here, but you are not going to take your entry here. You are going to wait for it to be retested. And we could see that price first gave us a change of character here. Price gave us this, something like this, you can see, before continuing and going to break this. Now, this is the innermost neckline that was broken before we could break the channel. You are going to wait for price to pull back to this level. That is the reason why I am using the rectangle tool. At this neckline, you wait for price over there, and you will take your entry once price gets to that level. So we are going to take our entry upon reaching here. You can set a buy limit order. Your stop loss will still be below this low, just below the low, exactly like the previous one. And you will also target the highest point, the highest level that gave rise to that. You can see it. Very beautiful. Now, look at these 2 entries. Just take a look at these 2 entries. This one is an aggressive trader. upon the breakout, you are taking your entry immediately, because sometimes the market will not give you this pullback that you are seeing. That is the honest truth. Sometimes the market will never give you this pullback. Now, if you don't have the pullback, this person here will now have the entry. He can take the trade for you. You will miss out if you are waiting for a pullback. However, if you wait for a pullback and price did pull back, then you will have a higher reward and you will risk less. You are going to risk less and you are going to have a higher reward. Now, if I'm to enlarge these things for you to see the risk to reward ratio of this, let me just increase it for you to see the risk to reward of each of these trades. Now, look at this, a reward of times 6 of what you are risking. For this particular one, you are getting times 2 of what you are risking. So the risk to reward is 2.3, whereas this one is 6.2. You can see how, if you are to wait for the pullback, and the lovely thing about this second one is that you may not even have a drawdown. Whereas for this particular one, you are in profit, then all of a sudden it gives you a drawdown before pushing up again. It depends on whichever type of trader you are. If you have the patience to wait for it, fine. If you don't have the patience and you want to enter to cool your adrenaline, and then you can enter. However, you will likely have a pullback, and most times it happens. Okay, it happens most times to retest this particular channel. And if I shrink it again, if you are to push this down to extend it down while maintaining these points, you can see that it is at the time that price is touching your channel line again, that's retesting it, it is matching with the neckline that is inside, that was broken first before the breakout occur on the channel. You can see now when these two things align together, where price came back to the neckline and is matching with the point where the price is also touching your channel, then you can now say you have a confirmation. It's a high probability trade. You can take your entry and you target your highest point, the point where you started drawing the channel. That will be your take profit point. And if we are to play out, you could see that price actually got to that level. Price actually got to that level when it occurred here. This is it. You would have hit your TP. Now this is on gold. So this is called a falling channel. It is falling down. Now the second one is a rising channel. So in a rising channel, the same thing is happening. You could see how perfect this one is. So we are going to pick our channel 2 and we will pick out 3.1, 2. This is the second touch. And then we have the third touch again, and we keep extending. Look at it, the fourth one occurring again. Once you click it, extend it to the opposite side, which is this side, and you can see how fitting it is. Now we have at least 1, 2, and 3 points over here touching it as well. So we have a channel. This is a correct channel. You are going to wait for price to break either to the upside or to the downside. So you can see now currently we have a break over here. This particular red candle that is here, this was the red candle that gave us a break. This is it. Now for the aggressive traders, they will start selling over here and their stop loss will be above the high that created that breakout. Now remember, this is our neckline. This is the neckline that I was telling you about. This was the neckline that was this candle, the wick, innermost wick that gave rise to that. Okay, so this is it. And you will target whichever low that you started drawing this particular one for. So we are going to target this low over here, and we have a risk to reward ratio of 3.8, almost 4 of whatever we were risking. So we have one. Now this is for the aggressive traders. Others will wait for the retest So you want a retest of the line. Price entered inside again to retest, and you can see it retested that particular neckline that I told you about. So you will take your entry there. You are waiting for pullback. You take your entry there. And your stop loss will still be just above this particular high that created it. Your TP is also going to target the last low that triggered that, and you can see it nice and easy on how to trade a channel breakout. Now for this particular one, we have a risk to reward ratio of 6.8, whereas for this one we have 3.8. Price continued to fall until it got to our TP. That is how to go about it. I am going to show you one on a live trade where it is currently playing out, and you could see what will happen. You can use it as well. Okay, very good. So we have a channel here that is playing out. So if you are to draw this one, this is on Euro NZD, because some people do say I should do it on a live market. I've seen people making comments like that. So pick your channel to pick it. You draw your points. You draw your points. Now this is a rising channel. You draw your points, and you also extend it to the top. You extend it to the top. So we have one touch, we have two here, we have three, we have four, we have five, almost as if it was breaking, it didn't. And then to the opposite side, we have one, and we have two, we have three, we have four. If I extend this, you can see that price will try to break it to the upside, but it melts down again with a wick. So this is not a breakout. The wick is not regarded as a breakout. You want the full body to break below or above. You want it to break below or above. Now, this is a trade that is currently playing out. You are going to wait for this price, and you can watch it out yourself. Anytime that price comes and you see it breaks either to the lower side, you wait for a retest of the neckline. If the neckline occurred inside here, you can wait for the retest there, and then you will sell the market to whichever low that triggered it. And in this case, this is the low that we are drawing for the channel. And one thing with channels is it needs to give you a risk to reward ratio that is a bit bigger. So for this one to break below, it has to really go. It is going to take time. It may not break now. It may not break now, because if you are to target, if it breaks below here, it won't give you much reward. Look at it over here. If you are comparing it to the lower part, okay, it won't give you much. So most times market may take it up. Market may push. We keep pushing this, forming higher points, higher points, higher points, higher points, higher points. When it's far enough, then you can see that the break can occur. And once the break occurs, you can target any low that triggered. You can target any low that triggered something like this particular low now that triggered. This is how to trade a channel breakout. This channel breakout strategy is easy, but it requires you to be very patient to wait for the breakout to occur. It also needs you to know how to correctly draw a channel, and I have shown you all of that in this video. If you have any question regarding this, again, just let me know in the comment section. Do have a wonderful day. Bye.